This is ISA 450. Now, do you remember we're doing overall review, right? And under overall review, how many items do we have inside? We've got 5 items. We've finished the hot review, the file that is being reviewed by the audit manager. Now we're dealing with the uncorrected misstatements. We've already finished presentation. We've already finished overall analytical procedures. And after that, we've got to do the other information from ISA 720. So let's have a look at ISA 450. The evaluation of misstatements identified during the audit. So what is a misstatement? A misstatement is just a difference between the recognition, measurement, presentation, and disclosure in the client's financial statements and in the accounting standards. That's a difference on those 4 areas. That would be considered to be a misstatement. Now, normally, when there is a misstatement, we will inform the client, and usually the client will correct them immediately, but sometimes they will not. But anyway, if they don't, then what we will do is we will accumulate them in a document called the Summary of Uncorrected Misstatements. Now, this standard says that there are 3 categories of misstatements, and we need to know the characteristics of each one because of whether we're going to expect client to make the correction or not. The first type of misstatement is called a factual misstatement. Factual misstatement is very clear-cut. Like, for example, if you have got a supplier's invoice here for $7,000 for something, but when you put down the double entry, you debit that expense, let's say it's an expense, for $700. Then your accounting entry is understated by $6,300, isn't it? Because the supplier invoice was actually for $7,000. So here, client will be expected to correct the misstatement for the simple reason that the misstatement is factual. There is an invoice to prove the amount is $7,000 and you only took up $700. Okay? So that's why we need to categorize the type of misstatement based on what we're going to expect the client to do. The second category is called judgmental misstatement. Judgmental misstatement is because there is an accounting estimate. And if there's an accounting estimate, the client will have one figure and we can have one figure. After all, it's an estimate. It's not an exact science. So in that particular case, if, let's say, client makes a provision for something for $10,000 and we think that the provision should be for $12,000, well, we can't force the client to make that adjustment. They feel that it is $10,000. So the only thing that we can do is ask them for the basis on which they made the $10,000 to try and understand where the client is coming from. So the client cannot be forced to change their figure because subjectivity is involved. Nevertheless, this figure, whatever difference that we have, like here there's a difference here of $2,000, that will go into the summary of uncorrected misstatement. Just like here, the first one, factual misstatement, the $6,300, will go into the summary of uncorrected misstatements. We're trying to add up all the misstatements that we find during the audit because we want to come up with an accumulated figure, an aggregate sum, as to how the financial statements might be misstated. Okay, but client cannot be forced to change the accounting estimate. The best that we can do is try and understand. Okay, and if we can understand, then maybe our figure can change to 10,000. Then the figure in the summary of uncorrected misstatements can also be removed. Number 3. The third type of misstatement is something called projected misstatement. And projected misstatement comes about because the auditor carries out sampling. Okay, and the auditor is trying to, from the sample, make a projection to the population. So here, a client cannot be expected to amend the figure because there's an obvious potential inaccuracy in the projected misstatement. The mistake in the sample is not exactly the same as the misstatement would be in the population. Like, for example, if you take a sample, you could say that the sample figure, the figures that are out by 10%. You cannot automatically say that there is a population here from which the sample was taken, that the misstatements in the population are exactly 10%. That would be ridiculous. Okay, but we need to come up with a projection. And from the projection, we can actually put it into the summary of uncorrected misstatements, at least use it as a basis to discuss this particular misstatement with the client. All right, so let's start again. We've got the standard. The standard talks about misstatement. What is a misstatement? We've already defined it, but there are 3 categories of misstatement. Why do we need to know what category of misstatement it is? Because of how the client will be expected to correct it, or we need to be prepared that the client cannot be forced to change the accounting estimate, or the client is not expected to amend it. All right, so let's go through some examples here. The first one, factual misstatement. Year end 31 March 20x5. An updated price list was issued in early March 20x5 to take effect from the next accounting period. A number of invoices were issued during March using the new higher prices. That would be incorrect, isn't it? Because the new higher prices would only be starting on the 1st of April. Now, your client became aware of this after the year end, and a provision was set up against trade accounts receivable to account for the credit notes which would have to be issued as a result after the year end. The client estimated that the extent of the credits required was $10,000, and the provision was made for this amount. But when you did your audit test, you found out that $17,542 worth of credit notes was actually issued. So now you can see here that the figure is now understated by 7542. So what do you have to do? You will have to debit revenue to take this out, and you would need to credit receivables, or maybe a provision against the receivables of 7542. And this figure will have to go into the summary of uncorrected misstatements. Okay, summary of uncorrected misstatements basically contains all the auditor's adjustment. All right, and this adjustment we would expect the client to put through if it is material. But whether it's material or not, we'll have to wait to see at the very end of the audit. Okay, the next example here, judgmental misstatement. This is to do with accounting estimates. So here, the auditors have determined that an appropriate range for an allowance for obsolete inventory is between 160 and 200,000. So the auditors are making an estimate, and based on the estimate, they are saying the allowance would be between 160 and 200,000. What will be the judgmental misstatement here if the entity itself has recorded an allowance of 140,000? In this particular case, we'll look at the client's figure, and we will look at the minimum amount of our estimate. So as far as the minimum amount is concerned, we're saying that there should be an accounting entry of debit operating expenses of 20,000, and to credit the allowance for obsolete inventory of 20,000. And that accounting entry will go into the summary of uncorrected misstatements. So another example under judgmental misstatement is this. It says you're responsible for the audit of Basking. The financial statements recognize revenue of so much. During the year, Basking reduced the level of their provision for customer refunds, which is recognized in the financial statements. For the past 5 years, the value of the provision has been calculated based on 7% of 1 month's sales using an average monthly sales value. Management argued that due to improved internal processing systems, such a high rate of provision was no longer necessary and reduced it to 4%. The audit procedures found that the refund levels were similar to previous years, and that there was insufficient evidence at this early stage to confirm whether the new system was more effective or not. So the audit procedures found that the provision of 7% was actually correct. But what has client done? They have reduced it to 4%. So the external auditors are not convinced that it will be 4%. So they are expecting this figure to actually be increased. So increased by how much? So we're going to do a calculation here. It would be the current sales figure of this multiplied by 7% minus 4%. And that would be equal to 1690.8 million. So then in the summary of uncorrected misstatements, we're going to put it down as a misstatement. So here we're going to debit operating expenses, 1690.8 million, and credit warranty provision of the same amount. All right, so this one comes under judgmental misstatement. Of course, we need to ask the client for proof of why they have reduced it to 4%, because as far as audit procedures are concerned, we have found insufficient evidence to support that. Okay, so that is judgmental misstatements. We're just going to pile up all the misstatement into the summary of uncorrected misstatements first, and then we're going to go and talk to the client about it. Then, projected misstatements. So, projected misstatements here are that we are going to have a look at a population. Let's say this is the population. And then we're going to take a sample. And from the sample, after testing it, we're going to find out what the misstatement is like. So let's say the misstatement here was a certain amount. Let's say it's 10%. Then we're going to project it to the population to say that the misstatement here would be 10% as well. Okay, so let's read the scenario here. It says, additions to PPE total 52,000 in the year. Sample was selected randomly. Now, for projected misstatement, the sample will have to be selected randomly. Otherwise, you will not be able to project it. The value of the sample was 13,000. Repair items total 2,500 was found included in the additions, which is not correct. Repairs should be expensed, not included inside additions and capitalized. Now, let's have a look at the breakdown of this 2,500. They found that 2,000 were repair items included due to weak internal controls, and 500 was a one-off error which was due to human error. Okay, now when you're dealing with projected misstatements, you can only project things that would be repetitive, not one-off items. So in order to do the calculation as to what is a projected misstatement, we have got the 2,000 repairs that we had as a result of weak internal controls divided by the sample size, or the sample value rather. So the sample value is 13,000, but we're going to minus off this part here, which was due to human error. Take it out. So we're not going to include it as part of our projection itself, projection to the population. And that is equal to the misstatement that might be in the population divided by the value of the population. But the value of the population here, we're going to take out the 500. Okay, because the 500 was due to human error. So if you do the calculation out, X is equal to 8240. So therefore, the projected misstatement is this. Okay, that's the projected misstatement. But when you want to put it into the summary of uncorrected misstatements, it would be the projected misstatement plus the part about the human error as well. Because whether it's human error or not, it's still a misstatement. So then the total amount that will go into the summary of uncorrected misstatements will be 8740. Okay, because the human error is still a misstatement. Just because it's a human error doesn't mean that we ignore it. Okay, so what would the double entry be here? We are going to debit repairs by this amount, 8740, and then we're going to credit PPE by the same amount. All right, another example for projected misstatement. It says here, the accuracy of depreciation charge was investigated for a sample on a random basis as well. Like I said earlier, if the sample was not on random, we will not be able to do a projection. Okay, so accuracy of depreciation charge was investigated for a sample of motor vehicles with a carrying value of 4.5 million. The investigation revealed that the accounting system had failed to correctly depreciate vehicles acquired during the year. Consequently, depreciation in the sample had been understated and the carrying value of the vehicles overstated by 350,000. Take note here, the accounting system had failed. So if the accounting system had failed, that means this kind of misstatement would be repetitive. It's not one-off. Okay, and the total value of all motor vehicles at the year end was 125 million. So let's do the calculation here. We've got 350,000. That was the depreciation that was understated, divided by the sample value of 4.5 million. So it's equal to how much under depreciation in the total population of 125 million. Therefore, if you do the calculation out, X is equal to 9.72 million. And that amount is going to go to the summary of uncorrected misstatements. And how would you do the accounting entry? The accounting entry would be to debit the operating expenses, 9.72 million. And I mean, here specifically we're talking about depreciation, and we're going to credit the accumulated depreciation with the same amount. All right, and that's simple.